over to you.
Chani, thank you very much. The next panel conversation is on carbon pricing and the role of carbon pricing, and we've got an excellent panel both here in the room and on the screen as well, who I will introduce. But to start this discussion, I wanted to firstly thank the previous panel, because of course it's the discussion and the identification of pathways and credible pathways which really is the foundation or the scene setting for then the discussion of, well, how do we actually take a journey along these pathways? How do we turn these pathways that are credible and make them actually happen, move our real-world economy along these pathways? And is there a role in that? And what is the role for a price around carbon? Now, just to bring all of you in the audience into the discussion here, I wanted to ask you a question. I wanted to perhaps invite you to categorize yourself with respect to carbon price. Are you somebody who is here thinking, well, I know a little bit about it, but I want to learn more. What is it? How does it get implemented? How big are the markets? How might they get scaled? Is there a business opportunity for me? Are you in that sort of category? Are you here as an explorer? Or are you perhaps, when you hear the word carbon price, do you think, price on carbon? Well, do I pay for carbon at the moment? I don't think I do. I'm a bit nervous about having to pay for a price of carbon that's embedded in what I do. So are you a bit cautious when you hear about carbon pricing? Or maybe you've thought about it and you've actually come to a strong view about the rationale for carbon price, and you're convinced that the climate crisis that we face today is in fact the manifestation of arguably the most enormous market failure, and that's a failure of markets, our investment markets and our financial markets, to actually direct capital investment to low carbon investments, and that in a large part is because carbon today simply isn't priced. So I'm committed to see how can we change that, what can change to make carbon pricing a reality, so that will be a factor to drive change. Or perhaps you're in another camp and you're not so worried about the purpose of carbon pricing, but you're really excited about the prospects of a carbon market, because I can make some money, I can trade for profit, it's a business opportunity. But what you really then want to see is you want to see our regulators and our market organizers get their act together so that we can scale up this market and exploit that opportunity. So maybe you're in that excited bucket. Well, or maybe you're in another bucket, maybe you're in a fifth bucket. I'll invite you to consider where you are: explorer, cautious, committed, excited, or something else. Now, our panel is going to help us go through many of these issues. So let me firstly sit down and introduce the panel, because they're now going to do the work. On the panel today, we have, just in the order we're seated here, Chiu, who is the head of carbon and ESG products at the Hong Kong Exchanges and Clearing Limited. So core climate is very much Ken's field. Then in the middle here on the stage, we have Hendrik Rosenthal, who is the Director, Group Sustainability at CLP Holdings Limited. Closest to me, we have a banker, Mr. Fei Lau, who is Senior Vice President of Sustainability Strategy, Economics and the Strategic Planning Department at the Bank of China here in Hong Kong. And then on the screen and kindly joining us via technology, we have both Mr. Chris Leeds, who is Head of Carbon Market Development at Standard Chartered, and then we have Mr. Yang Liu calling in from China. He's the General Manager of the China Emissions Exchange Shenzhen and the Secretary General of the Green Finance Committee of the Financial Society of the Shenzhen Special Economic Zone, who've been doing a lot of interesting things in the carbon market space. So those are the panelists. I've given you a flavor of some of the topics, and I'm going to sort of start at the top, as it were, and get the guys on the screen involved early, and perhaps come to Chris first of all. Chris, why do we need carbon pricing? Chris, can you hear me?
I can, and I'm just doing the classic, trying to find my unmute button. But yes, thank you very much. Thanks for the introduction, Jonathan. So yeah, look, why do we need a carbon price? Well, I mean, I think put quite simply, we set price on everything we use, from energy to metals and agricultural commodities. So prices, they react to supply and demand, and they ensure that essential commodities are allocated efficiently. And that's the big problem. We just don't have one on carbon, and the cost of pollution that's been generated as a result of basically getting away with it for free is where we're at now. I mean, we can apply this to lots of different areas. You can think about your waste products polluting into the sea, but CO2 is one of the real big issues, and we really do need to get a price on that. Yeah, you could argue that there has been a price, but it's been zero, and that price is therefore creates no incentive to conserve that resource. And at the end of the day, the burning of fossil fuels is a precious resource, whether we believe in climate change or not. We have a finite amount of fossil fuels, but what we've also got is a finite carbon balance. According to the latest IPCC reports, we can only emit just over 500 billion tons of CO2, and I think that's probably actually a little bit lower now than that, before we see catastrophic damage to the atmosphere. But that sounds like a lot, but when you realize we're emitting 50 billion tons a year, it will get used up in less than 10 years. And at current rates, we are on for a 3.5 degrees temperature increase. Now, there's obviously a little bit of, there are many arguments around that, maybe slightly less if many of the policies are enacted and people are really going to get out there and make the changes. But a 3.5 degrees world could result in flooding of cities like New York, Amsterdam, and of course, Hong Kong, and we've seen some of the impacts recently. We're seeing this all around the world. New York's actually had a flood recently, and we know what happened in Hong Kong a few weeks ago, very sadly. So, things are really starting to change, and conversely, we're seeing forest fires in places like Canada, which have been unprecedented. So we need to halve emissions by 2030 and to get to net zero by 2050. And the net is the important thing here. That not only do we need to get to reduce our anthropogenic emissions to zero by 2050, we need to start removing emissions. So that means having other sources of emissions removal in the economy. Forests are one way, but really we need to go beyond that. And this carbon dioxide removals through technological projects are starting to grow, and people are starting to get interested in that. But you need a strong price signal to make the change. And so far, much of the focus has been on legislation, and that's important, but it's not going to be enough on its own. We need a massive investment into emerging markets to ensure that they can continue to grow using renewable energy to protect nature and to invest in new low carbon technologies, as I've just mentioned. So that is why we need a price. The difficulty has been in getting something to work globally. And a patchwork solution is not good enough, as there will be winners and losers, which pushes countries towards protectionism. And we've seen this quite a lot recently again. We may even talk about carbon border adjustment mechanisms. You can talk about some of the subsidies that we're seeing in the US. So really what we need to get is something that's going to work globally. The voluntary markets can be part of that to help create the infrastructure that will allow things to start to come together in one large connected market. So that's really what we want to see, and I think Hong Kong's in a really strong position to support that.
Brilliant, Chris. That's a great scene-setting landscape of both why and then some of the things we might need to do to drive that, and Hong Kong's opportunity. And if I'm hearing you correctly, I'm hearing the sort of the economic rationale, or the economist's rationale coming through there, that carbon pricing, it's really about, if you want the efficient allocation of scarce resource, the scarce resource being the carbon budget in a sense, pricing has a huge role to play. Let me come to Faye, another banker. We've got the second banker to work here. Faye, do you agree with Chris? Is he missing something? What are your thoughts on why carbon pricing?
Yeah, I actually kind of echo from Chris Will on, actually the carbon price is a very good indicative and a signal And what we are trying to do today is how to use this signal well to actually achieve a goal, which is to go for a net zero path. And by that, I want to mention one point is that we shouldn't just see carbon pricing as a snapshot of today's price, because when carbon is actually trading on a commodity market like the others with the derivatives and futures, it actually has a range of prices, a series of prices, so that it can tell us how the future carbon price will be. And this is very important because it can drive the change in behavior. For example, in the corporate level, carbon pricing can help us internalize the cost. I know some companies and also FIs actually adopted or thinking to adopt an internal carbon pricing so that they can allocate the cost of the carbon to every department. And then this can actually have a very good bottom-up momentum within the company itself to actually go for the net zero pricing. And this also can help us to do a very long-term net zero carbon planning. For example, when we are discussing on when should we achieve net zero, with the carbon pricing, we can say, if we are not starting to invest today, how much more we have to pay for the carbon price in the future? And this is actually kind of behavior changing, not just for us, also for our management or for our board of directors or for our stakeholders as well. And to us, because I work in a ESG coordinating team for a bank, we often talk to our frontline business people. They're all supportive to sustainability. They are all aware of the importance. But when we talk about, please, you have to trim down some of the carbon sensitivity industry inside your portfolio, they have realistic concern, KPIs on business target, things like that. And this is where the carbon pricing can help, because if we give them the price of carbon, they will do the math themselves. And this is very helpful. And last but not least, I think in the whole economy, with the carbon pricing, with a clear potential profit, with a clear potential profit and the economic size, that actually can attract innovative talents to go for solutions that can drive banks or other companies or industry to go for the low carbon. And this is where we can change the behavior and actually really do some real impact on the carbon, on the net zero path.
That sounds very powerful, moving from the concept to actually then implementing it. But do you do that at the Bank of China? When you make loans, do you factor carbon into your lending decision? Do you make your bankers address carbon when they travel or make other purchases?
Well, this is a very good question, because this is where the planning should go away, should go from today's path and to our future path. And this is where we are trying to do. And we are hoping that we can have a good carbon price to do that. And this is where I think the later part of the discussion can go to. Where can we see, so what price level should we set for today and tomorrow?
Great. And Hendrik, I'm going to come to you in a moment, because I can see you're eager to answer from the corporate's perspective. But I do want to, I'm sticking to the order here, because I want to bring in Mr. Yang Liu from Shenzhen. Mr. Yang is going to talk in Mandarin. So if you're linguistically challenged like me, you'll need to use the headset and the translation to hear the answer. But before we move into some of the where are we and the how do we grow, I'm really interested, Mr. Yang, to hear your perspective on why China, and particularly in Europe, why Shenzhen has put so much effort into establishing a carbon price mechanism and establishing the carbon markets that you have established. Mr. Yang, please.
Moderator, distinguished guests, ladies and gentlemen, good morning. Now, concerning the carbon pricing mechanism, there are a number of purposes. I come from the exchange, so I would like to talk about the Shenzhen carbon market main products. There are three main products, and I'm going to analyze what kind of changes can this carbon pricing mechanism bring to us. So it is a market-oriented mechanism. There are three main purposes. The first purpose is for the carbon market and also the quota products. Well, they can facilitate companies to do decarbonization. If you look at the Shenzhen carbon market, for the government's regulator, for annual emission of more than 3,000 tons of carbon, they are incorporated into the scope. So there are around 700 key enterprises involved. And through carbon market fulfillment, they are able to discharge and share social responsibility. For companies, in order for them to reduce carbon emission and to reduce carbon market fulfillment costs, well, they would also like to get some benefits from the carbon market, so they will take the initiative to implement energy saving and decarbonization improvement works. So there are projects related to the use of renewable energy. With these actions, they can also enhance new energy technology and also decarbonization technology demand. And this can also greatly promote the development of green and low carbon industries. Then for our carbon pricing mechanism, well, here comes the second purpose. Through the carbon market traded products, including quota and voluntary decarbonization volume, incentives can be given to clean energy transition, and green and low carbon industries development can be promoted. With the carbon pricing mechanism, clean energy projects can be given economic incentives to encourage companies to make more use of renewable energy. At the same time, investments into renewable energy will be made. So, for example, carbon sequestration and also other related concepts will be facilitated. And then regulators will put in place some carbon decarbonization quota in order to enhance company sustainability. And also they can achieve technological upgrade and better industrial development. The third purpose is the promotion of projects in relation to carbon sequestration in order to achieve green lifestyle. So Shenzhen municipal decarbonization volume will be granted, and these will be linked to some carbon credit and incentives to encourage members of the public to go for green transport, green mobility, green consumption, green office, and other low carbon acts. So in this way, the whole society's participation into mitigation of this kind of social change can be encouraged. Now, with this carbon pricing market mechanism, enterprises can be encouraged to reduce carbon emission total volume, and new energy industries development can be encouraged, and also the public will be encouraged to take part. There will be more change towards green production and green lifestyle. That's all from me. Thank you.
Brilliant, Mr. Yang. Thank you so much for that. This to me is the power of the Green Finance Association in action, how we can hear the voice from China and Shenzhen in this case, just how for the first time, I think, in a conversation around carbon markets, we've seen the whole demand and consumption side brought into the equation. I think there's perhaps something we in Hong Kong ought to be exploring together with our friends in Shenzhen, just how some of these shifts in green towards green consumption might go hand in hand with the development of carbon markets here. But with that in mind, let me come back, Hendrik, to you. The question I sort of held back from you earlier, just to think about, and you can help Fei out here around sort of how might a corporate use carbon prices? Do you, in your world, do you use carbon pricing when you make investment decisions? Are you buying, or are you thinking of buying credits to Mr. Yang's, rationale number one, to actually sort of decarbonize the bit of, the CLP business that you can't yet decarbonize in the physical world? Talk to us about the corporate perspective, Hendrik.
Right, and it's very good actually that I haven't yet gone, because that was excellent scene setting, and thank you for that contribution just now on terms of what are the different mechanisms to decarbonize. And carbon pricing is just one tool. I think that's something that hasn't really been said yet in terms of how do we decarbonize our economies actually as a society, right? As a country, as the world. So a carbon price is a useful tool in some respects. There's other ways of doing that. if you were to talk, there could be direct government regulation to mandate certain energy efficiency standards. In this building, for instance, you have to have a minimum standard. It doesn't currently exist in the same form that it could be in terms of really pushing existing buildings, for example, to retrofit. There could be a tax on a product. How much carbon is in this Apple iPad? You have to pay that tax. Government could incentivize consumers via a tax. There could be a sort of a mechanism to just really directly shift products and consumption towards the lower carbon. Or we can use this tool as a carbon tax and develop credits. And it's really a question of when and how do we deploy what, right? And if you take the example now with the emission trading scheme in mainland China, where electric utilities are mandated to have a certain cap on their carbon output, and through that create a market that gradually phases out, essentially, the most carbon polluting coal plants. That's one way of managing that. Or what we have in Hong Kong, the government tells us what to build and not to build directly. Sort of very much a command and control kind of approach, right?
A scheme of control.
Or a scheme of control, agreement that we have, a contract that the company has with the government to deliver affordability, to deliver supply reliability, and to deliver decarbonization. It's a balance of factors that need to be considered, right? And carbon is one part of that equation.
So I'm not suggesting you're not answering the question, but are you answering the question about...
I'm getting there. I just wanted to make sure.
Are you answering the question about how do we use it in investment decision-making in that, well, actually, we have a different scheme in Hong Kong because we basically negotiate with the government the investments that will...
So Hong Kong is very unique in that sense, and we have ongoing negotiations with government of how to and when to decarbonize to get to our 2035 target, that is a government target, and what investments need to be made. We don't need a carbon price for this. Very frank, like we do not need a carbon price in Hong Kong for electric utilities. It's already being mandated by government, and we have negotiations and discussions on what are the best solutions from a technical engineering perspective, and what impact does it have on pricing, on tariffs. The affordability discussion comes in. How reliable is our grid in Hong Kong? So all that is negotiated. So yes, carbon is part of the equation, and we will, and this is the challenge now to get to your question, in terms of the carbon sort of pricing mechanism as a corporate, and how do we utilize that further. So we have a trajectory, we have a carbon intensity of our electricity that we project from now to 2050. Based on the portfolio that we have operating in various markets, not just in Hong Kong, where we have invested in Australia and India and mainland market, and that collectively has a certain carbon footprint, that electricity that we send to customers. So what do we do with that, right? How do we manage that transition? And it is a very distinct sort of challenge market by market. And for us, it's very clear, coal needs to come out. We need to shift to zero carbon electricity. How do we manage that transition from a business planning perspective, right? So carbon is built in from the perspective, it needs to be zero carbon is our target. Yeah. We don't need another internal carbon price as a corporate, for instance, to tell us where do we make the next big asset allocation. Every asset allocation has to be zero carbon. Yeah. Boom, we're done. Not done. We have a lot of work to do.
Right. Very clear, very understood, and obviously a very particular underlying contractual situation and responsibility that you and CLP and the other generators here in Hong Kong have that is driving that. So I think you're saying, Hendrik, you're unlikely to be a buyer of carbon credits. Is that what I'm hearing?
No, I think the jury's still out. And the discussion earlier, thank you for that. You have set the scene a little bit in terms of the state of the voluntary carbon markets. Do we utilize credits? Is it a better allocation of capital to decarbonize our Scope 1 emission. So for us, the priority is Scope 1. Our Scope 1 emissions as an electric utility are everyone else's Scope 2 emissions. That's our priority. That's what we need to focus on, getting to zero carbon. That's get rid of Scope 1, right? We've solved a lot of other people's problems that way. Now, do we then, okay, in light of the fact that we can't just go around shutting coal down tomorrow, right? And I think this is where the voluntary markets could conceivably come in. Given that we have this trajectory, we have a pathway, we need an orderly transition to make sure the lights stay on, for one thing. Do we then go out to market and offset our Scope 1? And that question, in my view, including from the Integrity Council as well as from the VCMI, and then the likes of SBTI, this question is yet to be clarified.
Right,
but we are open-minded. Yeah.
You're open-minded. So if you were confident you'd get credit and recognition, then you would consider it.
Yeah.
Okay, and there's a very good question on here, which we'll come to later, and what might be the inflationary impact if you did that, and what would on energy prices. But I want to bring Ken in, because Ken's been smiling, listening to you know, Hendrik, some of your comments there. Maybe Ken, you can just sort of help us with a bit of context, sort of where are we today in the terms of sort of the utilization of carbon pricing? I think you've got some stats, so I hope I'm asking you a question that you've got the answer to, but how much of the world's economic activity is subject to a carbon price today?
Right. I try to give a bit more calmer, try to do a bit of transition in between so that, no, I'm kidding. I think I'm trying to give a bit of context where we're standing in terms of carbon market development. Actually, what Hendrik also mentioned, Mr. Liu also mentioned, it's not just one tool. There are multiple tools running in parallel. So it's a portfolio of instruments. So broadly about the ETS market, the voluntary, and the tax, right? Actually, globally, I think the largest one is still the ETS market, which is around 11 to 12 gigatons in 2023 by means of coverage. So in terms of dollar value, easier to quantify in terms of dollar because we're all from financial sector. It's around 100 billion US per se. But compared to current, like for example, equity market, it's still very, very small. It's less than 1% or so.
But 11 gigatons is roughly a quarter of global emissions.
Yeah.
So it's very significant in terms of coverage in that sense.
Right. But for that particular ETS market, in terms of tons, it only covers around less than around 20% of total emission globally. There's a carbon coverage in our life, right? So it's still, there are a lot of rooms to grow. Of course, if compared to a decade ago, it's around 70%. So in a decade, we grow for more than double. So it means the carbon price did play an important role in terms of the overall context of decarbonization. Just a bit more about the carbon market. Of course, we talk about ETS, carbon tax, and so on. And then the voluntary carbon market also play a role, but that one is still, relatively to the ETS, is still very small. Like in terms of the total issuance in the market is only around 1.6 gigatons, so it's around billions of US, around 10% of ETS or less. So after all, I think there are also a lot of room to grow. Compared to, some, like Tracy mentioned, there are a lot of companies trying to pick up in terms of the pathway to decarbonize, and obviously all this will contribute to a steady growth in the next couple of years or so.
Great, and the Core Connect, Hong Kong, what sort of volumes are we seeing there? How are we building the voluntary market here? Just to get some context to the scale.
Right. Of course, in terms of the numbers that we published, like last year is around 400,000 tons for first year. But recently we see some pickup in terms of volume, like in September that we see some 200,000 tons, like one ticket moving on. I think the overall VCM market has going some downturn in the past month or half a year or so. after a lot of political tension, a lot of controversials in terms of VCM market. But recently, I think we see a bit of a steady state and people try to reuse on the real use case on how to make good use of the tool to decarbonize.
Interesting. So we're clearly seeing we've got some issues around growing, scaling the voluntary market. That's obviously why we have these initiatives. I'm going to come back to Mr. Yang in a moment on the Shenzhen experience, but Fei, if I can come to you just on these different sort of methodologies, because what I'm hearing is Shenzhen, I think the quotas underlying what's going on there, the quotas on what's underlying what's going on in Europe. Hendrik mentioned sort of taxation, the different routes to getting a carbon price. Any views that you have yourself as an institution in terms of how you think what might be coming up and what you're planning for?
Oh, right. Actually, in the market, as all the panelists are mentioning, there are a lot of ways to have a carbon price. One factor that they seldom mention is about how we can make a carbon price in the private sector. For example, when we are talking about the internal carbon pricing, so what is the right level, as I mentioned, what is the right level of carbon price internally we should set up? And this is can be arbitrary, like by man-made decisions. For example, Microsoft in 2012, I remember, they actually set up a carbon price as $15 per ton to allocate it to all of its internal department. I couldn't find the rationale behind why is this $15, but anyway, we set a level, and that actually the pricing signal can help anyway. Also, when we are talking to other participants in the markets, some actually suggest that actually the internal carbon price can be set based on the underlying assets you have. Because if a bank or FIs or other institutions invest in some kind of carbon credit creating assets or projects, they actually have an internal price to get the carbon credit, and this is where the internal carbon pricing can be set. This is one thing, and for a bank, we often have sustainability-linked loans, and in the sustainability loans, we all know that there are performance targets, and most likely the performance targets will have a target on how much carbon emission you can reduce, and if by achieving that target you can have a much different interest rate, much lower interest rate difference, and the premium between the original interest rate and the discounted interest rate, that premium actually is quite represent the price of the carbon, and how this price or interest rate is actually can be set. Actually, this is based on, let's just say, is a discussion between us and our own customer, and this is how we can do the carbon pricing in a very micro corporate levels, and in the public sector or what we talk about, we have an ETS system, we have carbon tax system, and actually this can be a combination of both. Because, for example, in France, we know that they use the carbon tax for some lower emitting sector and carbon pricing for an ETS system for a more higher emission sector. And for UK, they actually use a carbon tax as a minimum price. So this is also, there are all kind of ways to set up a real carbon price in the market, and we are always on the way to sorting out what is the right level. Because at the moment, for example, because as I forgot who mentioned it earlier, because we don't have a collaborations or interconnectivity within the carbon market, there are very large ranges of carbon prices in the world. I remember in Switzerland it's about more than $100 per ton, and in some other countries it's just like $15 or even less for a ton. So how can we have a very good way on how the carbon price should be today and in the future? I think we need Ken's help. With the core climate, with the VCM market, all the corporates and FIs can have a much clearer view on what the future carbon price can be, and we can actually plan and act accordingly.
Faye, thank you. I mean, I would just sort of echo what Faye said. As many of you know, when I'm not working for Dr. Ma at the GFA, and in my night job, I also work for a bank, and we use carbon in two ways. One, we have financed emissions targets that we try and manage to. And secondly, we put carbon pricing in our long-dated scenario analysis. And I would say it's still very, very early days to start seeing how that is impacting decisions. It's probably not had a big impact to date, but that's what we're working on. But I think that might contrast, Mr. Yang, and I want to come back to you on the Shenzhen experience, where what I'm hearing is you've utilized the quotas. What's been your experience to date in terms of introducing the quotas, building the markets? How has that shifted behaviors? Are you seeing measurable and material changes? Perhaps you can tell us a little bit about your experience to date, Mr. Yang.
Yes, I can do that. There were 4 points for our work that are set up by the national government. And Shenzhen is one of the relevant parties, and that is we have set up our first carbon trading market. And from the 4 points and also the operation of the market, if I can share some of the experience very briefly. First of all, there are 4 areas. The first area I would want to speak of is about the regulatory mechanism for the market. It's being optimized as we speak. And in the process, the relevant organizations, they do their research and also they do wide consultation. So for the policy on carbon pricing, this is helpful. And there is constant optimization and adjustments and changes to the relevant mechanisms. For example, for the power generation sectors, they are included into the carbon market. And these power generators, in the end, for example, for the Shenzhen market in 2020 August, there was the Shenzhen emissions rights regulatory opinion. And after that, there was another regulation which was launched, and that is transitioning from a allocation that was zero price, there was an allocation with price. And also from the total emissions, there was a pricing on total emissions. So this is in keeping with the macro policy of the nation, of the country. So Shenzhen had also increased the richness of the market, for example, in disclosure, in product types, and also strengthened the market in its operability as well. And at the same time, the companies are also adjusting to this carbon market, because for the carbon market, it directly affects the cost of operation of the companies, incentivizing the corporations to proactively lower their carbon emission, and also to enhance their capability in operation and also in delivering on their commitment. For example, in clean energy usage, in low carbon production investments, and also using renewable energy, raising the system reform, smart controls and measurements of energy and resources usage to lower the total emission of carbon and also the concentration of carbon. Well, after 10 years of this regulation and also with the data tracing, the Shenzhen carbon market, I would say, is already, in average, lowering by 42% of the relevant organizations. And it has raised some 62% in value addedness in the industry. So this is a very good trend. And also it helps with the overall Shenzhen lowering of carbon emissions. That is, we're lower by 5% than the average among the cities of China. And we are at world level, I would say. And also in terms of financing, that is green financing innovation, we are also stepping up with our efforts in that. And with our platform and our market, we are coming up with new products and tools, including carbon funds, carbon bonds, carbon assets mortgages or collateralization, and carbon assets financing, structured products, carbon index, investment products, etc. And there are 23 areas or locations related where we have financing platforms, investment platforms building. And there are some funds being set up as well. For Shenzhen, for the size, it is over 700 billion RMB in size for our green finance market. And green finance and also climate investments, this is also growing in size as well. And at the same time, in 2011 to 2022, there have been over 10 years of development. So we have provided very good experience for nationwide, so that in July of 2021, in terms of the there had been carbon trading all over the nation, in particular for some sectors, for example, in power generation sector. And this is 4.5 billion in terms of size, and this is the biggest in terms of among the global markets. So fossil fuel and iron and steel, construction materials, ferrous metal, paper manufacturing, and aviation and shipping, 7 sectors actually will also be transferring to this carbon trading and also carbon emissions and also securitization. But there is still a lot of work to do. This is a very grand mission, and we will continue to work hard in these sectors and in the general direction. Thank you.
Mr. Yang, thank you so much. And again, it's a great, I think, learning from Shenzhen and China here. The messages I took, it's going to take time, but it has been very impactful, and you listed out many, many areas that I won't repeat. It has to be a dynamic process. You have to keep reviewing and changing the rules as you go. The question in my mind, though, of course, and I'm going to pass this question to you, Chris, to comment on, is just we might make a comparison with, how a sort of a quota-based system has driven change in Europe. But when we look at the voluntary markets, interested to get your perspective, Chris, on the scale of impact that we've seen in voluntary markets. And please do, in answering that, feel free to start, moving into the topic as to sort of how do we grow that? How do we develop those markets?
Yes, thanks for that. So just one thing I'd also just like to come back on some of the comments earlier, and certainly Hendrik's comments around kind of scope 1 emissions. And yeah, absolutely right. The government sets, or regulators, authorities set the long-term target, when companies should decarbonize. But I think in the meantime, you have these incentives, the pricing incentives, cap and trade, that will then help companies price that in effectively, and also to create those long-term signals, right? So that's very much for scope 1. And I think, if you look at the EU ETS and the China ETS, they're scope 1 schemes that very much focused on power generation. And also you're starting to see moves into other sectors. The European Union's always been in things like steel and cement. And I note that I think that's the direction of travel in China and elsewhere. And so you have this strong price signal for those areas. But you could argue that if we had one big global market, we wouldn't need any other incentive mechanisms. And now we're not going to get there. What I think we're trying to do is to create the right incentives for that overall transformation. And so the so-called voluntary market, and I have to say I'm not a fan of that naming convention. I think part of the problem is that we call it voluntary, and it really should not be voluntary. It will help specifically really support the scope 3 emissions. So I'll give you an example. A company like Apple we'll say, well, we have with our operations, we've got very few emissions. Our direct impact on the economy is very low, but many of their operations are based in China, as we know, and they are not included in their scope 1 emissions and scope 2 emissions. It's their scope 3 emissions, and so scope 3 gives you that ability to actually reach beyond your own impact. It's actually the impact in your value chain and how that's going to impact emissions. And so the pricing of these and encouraging, if not making it mandatory for companies to compensate for their impact on the planet, will help us to accelerate the transition. And that's what we need to see. We hear all the time it's going to take time. We hear all the time that this is something that is it's a long process. We don't have time, right? We know that we need to halve our emissions by 2030. That's 7 years away. It's clearly not going to happen at the moment. So what we need is every tool in the box to create that incentive mechanism and to accelerate the transition. And I think that's where pricing and the so-called voluntary market comes in. What it can do is it can create that linkage between the different markets. We have all of these disconnected markets at the moment. The European Union is currently pricing carbon close to 100 euros a ton, or certainly between 80 and 100 euros a ton. There's very few other places in the world where we see those kinds of pricing. That's because many of their low-cost abatement options are now done. They're really pricing off the long-term price of moving to green hydrogen, for example, and even that I think is probably priced way too low at 100 euros a ton. But that's the direction of travel. Now, in other countries around the world, and in particularly emerging markets, there are many more low-cost abatement options, and I think by encouraging companies to compensate for their emissions using these baseline and credit systems, using the mechanisms that are developed through the voluntary market, will help us to accelerate that transition. But that's why we've also got to make sure that these credits are high value and that they are high quality. And really, what we mean by that is that they are additional, so they wouldn't happen without the carbon finance. Largely, and also that they are that if we're looking at things like nature-based removals, then we deal with permanence. We deal with leakage, in other words, where emissions are reduced in one area but they go up in somewhere else. So all of these things need to be done, and that's the kind of work that we're doing at the Integrity Council, the ICVCM, to really ensure that carbon credits are of the highest quality possible. But really, what we can then do is if we have a set of credits that are comparable, they can then become fungible. And we can see investments coming from China into projects outside of China, or coming from outside of China into China. So, I think there's that linkage that we need to see, and the creation of of carbon credits that are essentially comparable, interoperable, and ultimately fungible. And that's what we're trying to do with the core carbon principles that we're developing.
So, Chris, just pausing on where we are today, who are the players in the market today? Who are the sellers? Who are the buyers? What do they look like? And what's your sense of what's motivating them to participate in a market that today is still voluntary?
Yeah, look, I think actually a very good question, because there aren't enough buyers. If you look at prices for the credits in the voluntary market, they are still sometimes in single figures, and maybe double figures, but certainly not much more than teens, and that's because we aren't seeing the corporates in. So really, the big players at the moment are banks who are trying to establish the market. Some of the legislators are being very active. The exchanges, there's a number of exchanges around the world. So obviously we've heard about Core, we've heard about the exchange in Shenzhen. But we last week, I think Malaysia announced that they were setting up an exchange, Bursa Malaysia. Indonesia did their first trade a couple of weeks ago. You have the RVCMC in Saudi Arabia. You have ACX, which is global, but certainly it's looking to develop an exchange in the UAE ahead of COP. And then Climate Impact X in Singapore that Standard Chartered is a founder investor in. These are all happening around the world, but none of them are really interoperable yet. So what we're not seeing is enough demand coming through. The corporates saying, yes, this is something that we need to do and that we need to do now. And that's what I think initiatives like the Voluntary Carbon Markets Integrity Initiative are there to do, is to explain to corporates what they should be doing about their emissions and how they should compensate for them. But we see governments coming in wanting to develop projects locally and support projects in their countries. So certainly a lot of the African countries are involved, and you have initiatives like the Africa Carbon Markets Initiative, which is trying to develop carbon markets there and to support investment and development of those cheaper abatement options. But we now have the situation where corporates are holding back because they're concerned about the reputational issues. Well, I think they should be concerned about the reputational issues of not doing anything, because that's the concern that I have.
Chris, great. Ken, how does that translate here in Hong Kong? Chris talking about implying that there's a lot of latent supply there, but it's just a shortage of buyers and corporates. Is that reflected here in Hong Kong?
Yeah, I echo what Chris mentioned broadly, but I mean, from our experience in this part of the world, a couple of particular issues are more significant. One thing is we spoke with quite a couple of corporates, be it in the region or even in Hong Kong. Rather than talking, they buy carbon credit for different purposes. I don't think that they have a good understanding what it is. Before we talk about how do we want to use it, I think in general, the corporate either we in touch are very advanced, that they already engaging in some of the carbon transaction, but it's only very, very rare, a small part of it. In general, for the corporates that we spoke to, especially along the supply chain, they try to understand what it is before we talk about, okay, how do they want to use it? I mean, it's I think one step back from telling them how does it look good on what's not right? So the first thing I think is very important is in order to echo what Chris mentioned, in order to encourage the corporate to step in, I think they need to understand the relationship between carbon offset and also the impact on their business. If you talk about their business, meaning decarbonization, how do they want to do it? So I think it's one step or two steps back, in this part of the world. That's the first observation that we have. The second part is, assuming that they know how to decarbonize, they found the overall, the steps that they need to take into, including understand the emission, right? Before we talk about buying carbon offset, reduce, for unabatable, then they engage in carbon offset. I think that part we need to do it properly. And then the second point I want to make is they may not understand that what they are paying for. There are a lot of talks, today, with surrounding, like, it looks like carbon it's just a pure cost from a cost perspective. And some company, we spoke to them, actually, they're trying to engage into this kind of activities in order to maintain the competitiveness of their product, rather than just seeing from a cost perspective, but also from an opportunities perspective. Because in day-to-day, we're not trying to say, okay, you do a product, you bundle in carbon offset, that's the only product that we talk about. But there are corporates that are trying to seize the opportunity to innovate their product in order to stay in the game, right? That is also very important. They need to understand that the purpose of doing all this, buying carbon credit, is already at the very later stage of the overall value chain. The first step is decarbonize. They need to increase their company value, competitiveness, the product competitiveness. Then we talk about, okay, for that part, then probably if you can't reduce it, then probably carbon offset is something that can help you. And then that kicks in to the point where you should do this or whatnot. Then there are a lot of other standard, and we keep, hearing like ICVCM and all this, or VCMI will kicks in.
I mean, on standards, Ken, are you going to go for standards? Because we talked a lot about regulators. We don't have a regulator or a policy maker on the panel, so we can't really ask them how are we going to drive that. But are you anticipating that push of the buyers will come, and therefore should Hong Kong be creating its own standards so that we become the market amongst all of the competitors that Chris mentioned?
I think we don't have a definite answer, but obviously, for example, ICVCM is a standard of the standard, right? So I think we will observe very closely what's happening. Other than that, I think another part of...
But that's not leading, Ken. Sorry to jump.
Oh, but one thing
observing what others... Are we going to jump ahead of what others are doing? That was my question, really.
I think it could be, anything helpful for the market development, we should study and look into it. Hendrik's smiling.
Yeah.
Bear with my role and then... But one point I want to make is, seldom people talk about IOSCO, and obviously they also issue a consultation paper on managing the mandatory market and the voluntary market. I think we also keep a close eye on, there are two parts of things we're talking about. One is about probably the participant behavior, and the other one is, for example, the asset creation and also the asset utilization, which is associated to ICVCM and VCMI. Right.
Brilliant, thank you. Hendrik, just picking up on Ken's point there about driving Hong Kong. Obviously you have a scheme, business covered under the scheme of control. You've explained why that might not be, but you do have other businesses. Would you buy for your other businesses, or what would encourage you to buy if Hong Kong had the leading standard for whatever we're going to call them? I'm hesitating to use the word voluntary now because Chris doesn't like it, but if we had the right standards for these forms of credits, what would make you, CLP, buy to offset for the rest of your business, the non-scheme of control businesses? What do you want from Ken?
Yeah, right. From my perspective, I always look at the group anyways, the group view, the CLP Holdings view, with the multitude of businesses that we have. But in terms of what would it take for us to buy credits, basically, what you're asking, right?
Yeah.
I think, so ICVCM, the core carbon principles, has done a lot of work. They've set the bar really high in terms of what is good. I don't think we need more work to be done in this space at the moment. And VCMI has come through, and there's some guidance, but it's really, the challenge for us is the climate transition planning piece that was alluded to earlier. How do you actually get to net zero, right? And do you have a credible plan, or are you just putting a whole bunch of numbers out there that say you will get to net zero by whatever time it is? And can you demonstrate to the market that you have that credible plan? And that's where I think ISSB actually has come through to some extent, to provide a level playing field in terms of what is it that the market needs to see to showcase that you have a credible plan. So for us, and if I just use CLP as an example again, we have a well below 2-degree trajectory that we currently mapped out to 2050. We should be doing 1.5, right? That's what we need to get to. That's what everyone needs to do. How do we fill that gap?
Would a Hong Kong homegrown trusted verifier help, in addition to the standards? Would that help you?
I think what we need in Hong Kong is credits, or what we need in our region is a standard setter, an institute that issues credits that are homegrown, based on, let's say, energy efficiency, one example. We have a lot of work to do in Hong Kong to make the existing building stock more energy efficient. Can we issue credits to finance that change? Because there's no mechanism in place otherwise for building owners, there's no incentive for building owners to invest in the buildings to increase energy efficiency. Yeah. So we need that sort of standard. I think, how do we actually make this happen in our own home market? Hong Kong, Singapore, the region, broadly speaking.
Great.
But from us, from a CLP perspective, would we utilize credits? Well, would it help us to get from well below 2 to 1.5? Can we fill that gap with credible credits? Is that money well spent, right? Say, whatever the number is, should we put it into credits to have a real offset, a real removal, or some sort of avoidance that is CCP verified, this thing is actually happening, and we allocate a certain number of dollars to that versus investing in our own assets, building more renewables, for instance, more zero carbon electricity. That's the dilemma in this space currently, and it applies to many sectors. And I think the challenge really is that when you then say invest in their credits, then people will come say, well, you're not doing it fast enough. It's a cop-out. You're just continuing business.
We need confidence.
Yeah.
I'm conscious we've just gone across time. I want two very quick comments from Fei and then Mr. Yang. We've covered a lot of the questions that have come in, but Fei, I just wanted to sort of try and close out on one, which is the sort of the fear of carbon pricing. It's just an extra cost and it's going to lead to inflation. Perhaps share a perspective, if you have a perspective, from your sort of planning and strategy perspective, your economics background. Is that a real concern, or is this a?
Well, I think in both ways, because when we are doing decarbonization, we are not just doing the decarbonization itself, because we are doing upgrading and uplifting of our efficiency or productivity. So it actually helps. So it actually helps generating more profit and revenue. And in another way, sometimes it is more about a policy-driven approach that we have to do anyway, because, for example, in China, we need to be carbon neutral in 2060 and carbon peak in 2030. And in Hong Kong, we have a blueprint. It's not mandatory, but we have a blueprint of having a 2050 carbon neutral already. So something that we have to do anyway. And whether we can have a price increase or inflation actually kind of depends on the market. Do you think so? It's not about when we want to increase our price, people will just accept it. Because, for example, as a bank, we can't just increase our interest rate anyway. So this is one thing. I think we don't have to worry about the inflation or the costing, because doing carbon is some kind good to the efficiency and productivity. So it will just grow the market bigger instead of we have to raise our price to share the cost.
So more of an investment today to avoid costs going forward. And the final question, Mr. Yang, for you, because the Shenzhen story is shining, gleaming in the global picture. I'm really interested to know what next for Shenzhen. If I could ask you just very briefly to leave us with a few takeaways as to what we should expect to see next in what appears to be, and what I'm sure is, the very successful Shenzhen story.
Okay, thank you. Because of time, I would only comment on one area first. Well, for the Shenzhen carbon market, it will further expand in scope. So that means we will give full play to market-oriented mechanism to promote the companies to do the work. The next step is to include the service industry into the carbon market, mainly shopping malls and hotels, because for industries, they're already included in the carbon market. So our next step is to focus on the service industries. And then we would also like to diversify the trading categories. In the past, we promoted the agriculture sector to decarbonize, mainly to B segment. In the future, for the public, well, we want to work on both to B and to C segments. And then the third point is to continue to give full play to Shenzhen's role as a regional market in carbon finance, green finance, and also climate change, climate transition, to help companies transition and upgrading. And then the fourth thing is to enhance international exchange and collaboration. All along, we're working with the Hong Kong carbon market. So we would like to enhance cooperation and exchange between Shenzhen and Hong Kong. We will also actively take part in the GBA's work and plan. So these are my 4 points. as my personal opinion. Thank you.
Mr. Yang, thank you. And we are over time. I think that's a brilliant place to finish. From listening to these amazing panelists, certainly from my perspective, a lot of the mist has sort of lifted and cleared around this very complex area of pricing and markets and how markets can support. I think we've also heard a lot of really interesting ideas how different approaches and different ways to take this really important topic forward. I think we've also had a lot of inspiration from what can be achieved by smart approaches, dynamic approaches. And then I really like Mr. Yang's concluding remark there, which I think brings us back to all of us here in the room together as the Green Finance Association, the importance of and the power of collaboration around not just carbon markets, but green finance more broadly. So with that, if you are in agreement with me, I think our panelists deserve a thoroughly rigorous, robust round of applause. Thank you, everybody.